And it seems to be working, right? Because the leader
is the consistently high returns that
Good afternoon, Michael. Thanks for being with us.
Yep, no problem.
So I just wanted to start off just by maybe letting you introduce yourself, what you do, and the rest of it.
Okay. Well, yeah, I'm an academic. I work as an associate professor in real estate here in Dubai at Heriot-Watt University, and I've been in that role for just over 13 years now. So
nice.
We have an MSc program at the university, which is helping segments of the real estate sector sort of upskill themselves, move into different areas of the business, move up in different areas of the business. My background is very similar to what the students are aspiring to do, I guess. I worked previously in Reading University in the UK. I did a few appointments at London University's CAS and one in Oxford. So very much an academic view, property research. We used to get commissioned work from consultants to try and solve or give thought leadership, should I say, to sort of problems. And then I took a few years in industry to become a chartered surveyor. So I'm RICS qualified. Came to Dubai just 2009. So a really interesting time to be talking about real estate and training real estate professionals. And just enjoyed that opportunity to be here, to be part of where Dubai's heading or where it's headed. And at the same time did my PhD with the university, and so I've got a doctorate degree in property valuation in Dubai.
Very nice.
If that is of interest.
It could be, right?
Yeah.
So the first thing that always comes to mind in a conversation like this is when we think of real estate and people say, I want to get into real estate, 9 times out of 10, that means becoming a broker or estate agent or whatever you want to call it, right? And so when someone teaches real estate for a living, I mean, I spend a lot of my time teaching real estate, but it's much more about essentially how to convince buyers and tenants alike to go for a property. How is it different for you? How do you see it being sort of where you're maybe teaching something that we're not?
Okay, I mean, the easiest way to kind of explain it to people, I've had many conversations when I say that I teach real estate, I get various different looks. But generally, I mean, it's a business degree. It's set up as a business degree. There's courses on economics, so understanding how cities grow, how cities evolve, how they develop, what forces are occurring and changing the market, to more business-led decision making about investment appraisals, as I said, property valuation. How do we value assets according to sort of international standards? How would we look at a development appraisal opportunity where we've got a plot of land in Dubai? What processes do we go through to evaluate that opportunity, and then what do those numbers mean, and what decisions can be made off those numbers? To other things, sort of more forward-looking themes around sustainability and the importance of ESG, how businesses occupy real estate and how they use that to grow their bottom line. So there's a wide range of I would call it sort of strategic real estate theory, essentially. So it's more about getting students to understand the fundamentals of real estate, how markets operate, who's involved. We look at things like property cycles, but it's drawing on their expertise to use those skills to make executive level decisions, essentially. Yeah.
Do you see your students going into sort of working for a CBRE Knight Frank kind of role as opposed to a Macomb Properties where they might be doing more conventional brokerage?
Yeah, we have a large proportion of our students going into those international consultants, or they're working for those firms, and they're doing their postgraduate degree weekends and evenings, so they're sort of upskilling while they're working, which is a good combination. We do have students from sort of, as you say, traditional agencies, and they come with a lot of knowledge, a lot of market knowledge, and they're probably looking to either move up within that agency to become sort of, if you think about an MBA, traditionally, someone who's mid-30s, 40s, they want to take on a senior role within a brokerage. They might be interested in just understanding, a syllabus-led program. And then we also have, the Miraz, the EMARs, the major developers here, and the banks as well. So it's kind of, expected who we have on the program, given obviously the importance of real estate in the business environment. So, and I think that's the attraction. It's not just a local qualification either; it's a global one. So people here, I guess, feel some confidence that they're getting a qualification that they can, whilst they're in Dubai working, they can benefit from as a global passport to other countries. And we've had the movement two ways. We've had people come and study with us and go and work in Canada, America, Australia, and we've had it the other way. People coming from Europe and other markets studying here and finding employment in the local market. So it kind of is a testament to the global qualities of the program, which is what we wanted it to be.
No, it's good. I mean, I think real estate forms such a big part of Dubai's economy, right? Mm-hmm. And a lot of the times on a daily basis, I get asked questions: how's the market? What do you see happening with my villa in the Springs? Blah blah blah. Yeah. Whatever it might be, and they're very valid questions. But I've always thought that it's interesting that it's agents that get those questions.
I get them too.
Okay, I'm sure you do. I think a lot of the times when people are asking an agent what their take is on a market, the one thing I think they're not understanding, the clients are not, and again, this isn't always going to be the case, because there are some very, very genuine agents that really want the best for their clients. But a lot of the times they have to understand that the agents it's not within their interest to talk it down. We're paid on a commission base, and it really if someone actually believes that the market's, let's say, overhyped or whatever, it would really take a highly moral agent in order for them to turn around and say to a buyer, do not buy now, buy in 3 years' time. So I've always felt that clients need to actually take a step back sometimes and ask the right people the right questions. You can ask an agent, what's the best deal? What can I expect in this market, et cetera, et cetera. But whether it's a good time to buy or not, I don't think it's a good question for an agent.
Yeah, it's not necessarily a good question for anyone really, just because it's such a personal question to the circumstances of that individual. Often people get asked the question because, the information they're getting is the market's gone up 20-30%, and then they ask themselves, should I be buying? Let me ask some people what they think. If you actually stick it to the more traditional motives of, this is the plan for me or my family in Dubai, and we're looking over, I always teach and look at appraisals at least over a 10-year period, and things get smoothed out a lot easier, a lot more. Though we're still forward looking, we're still trying to anticipate market direction, things smooth out, and they're not so volatile or choppy as someone who might look to purchase at a particular point in time thinking, I want to make the same 20% that's just happened, because often you're setting yourself up for a bit of disappointment. Markets can't go up at those rates continuously. So I do have that. I do have that same question. And I try and sort of form an opinion around why that person is buying, because I think if you're buying to follow a herd or to follow a trend, again, when markets get tested, like we saw a few years ago, you haven't got a plan to sit back and say, but why did I buy? If you can't answer that question, why did I buy in Dubai? You shouldn't be buying. Yeah. And then if you do know the answer to that, you're less emotionally led. You're less likely to panic. You're less likely to move away from that initial plan. And so it's like with any investing, really. What's the end goal, and what's real estate is a mid to long term game. Although historically people were making a lot of money in short time periods, that phase in the market is gone, and probably quite thankfully has disappeared. Speculation.
Yeah, I would say it's gone.
Yep.
There's definitely a lot of cases at the moment.
Yep.
Where we're seeing the higher end the property, the more we're seeing it, where people have bought, I don't know, villas off plan for, we sold a villa towards the end of 2020 for 9 million. And then we resold it recently for 13.5.
Yep.
Client had obviously, it was off plan, so the client had only put down 20 or 30%.
Yeah.
So you're talking about obviously a lot of money that was made. And there is examples of that at the moment. And I think, as you said, it's those stories that people hear, and then it creates the traditional FOMO, right? Mm. So it happens in real estate, it happens in crypto, etc. The one thing that I think people forget about in real estate is just how illiquid it can be.
Yeah.
Right. It's sort of you can get stuck, right? It's not like you can just throw it onto a stock market and there's a buyer on the other end of it. You actually, to process, especially when the market's down, to find that buyer. It's doable, but price is obviously going to be a big factor, and that's going to pull it down.
Yeah.
I'm sure you must talk about those kind of things a lot in your courses.
Well, again, I mean, the fortunate people who did buy in 2020 and around that period where there was a lot of uncertainty were buying with risk premiums priced in.
Yeah.
Right? So there was an acceptance of that risk, and it just, the rebound that happened was fairly quick. And I think similarly in the global financial crisis, the window, sort of the waiting window to sort of find the bottom and then for it to go up is quite short, months and not years. So that's always from the other angle, that's also quite reassuring that the downtrends or the really low prices don't really sit in the market for too long, because we're reaching those points where people are recognizing great value or good value. And so therefore you see these bounce backs to the higher prices. But yeah, I mean, traditionally someone buying off plan is making a profit in a larger proportion than someone who's buying a ready property, because there's the development risk, there's the holding period uncertainty and so on. So you can kind of expect them to if they're carrying that development risk to make a bit more off the price. But yeah, interesting, isn't it? I mean, it's sort of like, I think a lot of people also they think, okay, I'm going to buy a property in Dubai, but they don't recognize that can really go one or two ways depending on what you purchase as well, right? There's obviously the government offers many different developers the chance to come into the market, and there are mechanisms in place to protect investors. But the reality is that we often see like very different performance levels, where you might see one area jumping up 20, 30, 40%, while another area could even be going down, which I don't know if that's common in other parts of the world. But here in Dubai, it strikes me like, okay, you've made the decision to buy in Dubai. Now you've got to actually take that next step and make sure that you're buying the right thing in Dubai, depending on what you need. Yeah, that segregation of the market is definitely occurred at more granular divisions between different communities, different developers. And as you say, you choose the wrong community or the wrong developer, then it can be a completely different investment to someone else's experience. So, I mean, that's where advice and speaking to professionals comes into play. I think also with Dubai, we just last month we just heard that Dubai is now a transparent market according to JLL and their global transparency index. So that means, or I would expect it to mean, that people who are buying with a much more comfortable view on where prices have gone or where they're buying into that cycle, whereas before it was more around buying at a particular yield perhaps, rather than buying at a price and understanding, well, if I'm buying at 2 million, it fell to these units were sort of, the lowest they've been is 1.6, the highest they've been is 2.4. So I'm not getting a bargain, but I'm not buying at the top of the market or at the bottom. So I think it then means that I would expect people to source that information themselves and then approach further decision of where am I going to buy?
Yeah.
What developers am I going to, buy into, and so on. And that's good for the market because it means things become more stable and more rational, really.
Yeah, I mean, what you're talking about there is really the data that's coming from the land department, right? And where traditionally we for example, as a company, we have a subscription service with Property Monitor, which is it's got a tie-in with a large valuation company, and we get that data, and then we as agents can see where to price units. More recently, we're starting to see on the portals where they're now having that data fed in as well. And I know that there's a lot of agents that are going to find that quite tricky to work with, because if your unit is overpriced, it's going to become very obvious, right? Recent transactions are going to show, okay, this unit might be 20, 30% more than the last unit sold. What strikes me quite a lot is how these kind of things don't actually get spoken about too much. Like, I'm still sending clients reports. So telling them, okay, these are like the recent transactions where that data is available on the websites. It's not necessarily put together in as nice a fashion as I might get on Property Monitor, but I think, but again, this actually strikes me in quite a few things in Dubai real estate. Things like the laws regarding tenancy contracts. The law's been very clear. It's been very spoken about. And I'll still have questions by people who are actually in the know, surprised when I tell them that the landlord cannot renew the rent if it's less than 90 days before. Yeah. And that's something I've heard it on the radio countless times. I've seen it in the newspapers countless times. And I'm asking myself, why do people not know this yet? Maybe it's a transient market. I don't know. But what is your take on all that? Why is there such a low adoption of this information?
Well, I think, consumers get their information from their agent, don't they? So again, I'm not, one reason might be that discussion hasn't been, that transparent discussion hasn't been had with those consumers. It is a new market to most people as well. But as you say, the information's there. It's searchable. It's quite consistent. There isn't any nasty ifs and buts. It's fairly, it's straightforward. The parameters are set there. So I agree with you. I think there should be more familiarity with that. But it's probably the agency's role to just at a new letting kind of set those parameters out. Perhaps would help consumers.
Yeah, that's true. I mean, in our tenancy contracts, we obviously state that it's going to be renewed in accordance with law number 7 of 2006, or I forget what it is. But what we could potentially do is at the same time email them a copy of those laws, right? So that they are fully aware.
But I mean, there are portals that talk about, there's an FAQ section. It talks about these things. It's just navigating the consumers to those sort of things. And sometimes it's because the situation's a little bit unique. And as humans, we think because of that, the answer's going to be different. We want to hear a different answer to what the laws say.
That's true.
So, that can be another reason why people ask it. Is there a loophole that I can take advantage of? I mean, countless sort of neighbours have sort of said that, their rents aren't going up because they haven't been told of the rental increase within the 90-day period. So, and they're holding their line there to say that that's your responsibility, not mine. So there are some examples where it works in the tenant's favour if people are silent.
Yeah, absolutely. I mean, I actually think the laws are quite in favour of the tenants, like definitely compared to where they used to be. What is interesting is that a lot of the times, like from an agent's perspective, a big question becomes, well, who's your client, right? So if it's a landlord where you maybe have a long-standing relationship to and you paid them and they bought the property from you, they might have paid X amount of commission and then might have a relationship, and then a tenant comes through and they've paid the 5%. Yeah. And then the renewal's coming up and you can see one of the parties is going to get the sort of the worst end of the stick. like, who do you side with, right? And again, and I think a lot of the times this is why things are not spoken about, because the agents, the ones that are in the position to communicate it, are not necessarily, just by communicating could put them in a bit of a tough spot. So, and that's why I actually think it's important for people like yourself to sort of like take not necessarily the lead on this, but to be vocal about this, because some agents might be very trusted, but as an industry, there's definitely that credibility that we're struggling with. So yeah,
I think we get that across the world, though. Agents are our most common interaction when it comes to real estate, and like with any professional, you have good and potentially bad experiences with, and that then forms an opinion on that. But there's definitely, I mean, a lot of the local training is doing a really good, and the fact that brokers have to be licensed and so on, that it does mean that there's some level of consistent standard within brokerage. I'm, as we said before speaking, I've put a book together to try and also compile a lot of this information centrally away from, on a more impartial basis, so that people can refer to that and have that. Again, the questions you're going to get asked are still going to be quite client specific, but at least there's a direction to where people can go to find out these latest laws. So
your book's going to be Dubai specific?
It is, yeah.
Okay, that's cool.
So it's covering a wide range of topics for obvious reasons, but it does focus in on some of the more dinner table conversations about buying. Is it a good time? What's happened in that 20-year period since foreign owners were allowed to purchase in Dubai? What's happening in the next sort of 20 years as a sort of concluding chapter to it. So it's designed to be quite broad, but it's topical, and I think the chapters have been selected not just to be academic. I've written it in a very in a light way, data driven discussions, nothing too algebraic or sort of university level, but an easy pickup if you come to Dubai as either a professional, as an agent, or as a potential buyer and renter. There's a reference to a wide range of different parts of the market.
Nice. It's interesting. There's not actually too many books out about these kind of things. Like, there are a few real estate books, but I remember picking up a book I found I forget where it was, but it's called by Jim Crane. It was just called Dubai.
Okay.
And it was exactly this, but just in terms of Dubai as a city.
Yeah.
So I think he moved here in the early 90s, and I grew up here myself, so I've been here for a long time. And I just remember reading through, and it was talking about the financial crash and how things changed. And I think it's really important that we get that literature together, so that people can actually get an understanding of what's happened throughout this 20-year cycle within Dubai real estate. Because whether it's a downturn or hyped up market or whatever the situation might be, I think we're actually getting to the point now where we do have a bit of history.
Yeah.
Right.
Yeah.
We have gone through those cycles now a couple of times, and we've seen the queues form outside developers' offices a few times. We've seen the panic selling a few times. So there is good examples for people to learn from.
I think people tend to react more to the large percentage jumps. And if you look at, part of the book is looking at, 10 to 20 year time series, Dubai generally, or as an average, and I know we've just said that there's segmentations in the market, so it's a generalization, is probably running as a capital growth per annum over that 20 years at about 3%.
Okay.
So
it's actually
nothing
more
as wild as what we might read in the papers or have heard recently. But if you if you put on the top of that the rental yields, then you're getting into the double-digit returns that make Dubai attractive. And I think that's what has attracted a lot of investment into Dubai is the consistently high returns that you make on your money compared to other markets, and whether we have a debate about which markets do we compare to Dubai to. Investing in Dubai is similar to investing in a business, isn't it? I mean, if you believe Dubai to be growing in the next 20 years, you're probably likely to invest here.
Yeah.
The same as you would if you felt a business had a good growth plan ahead of it as well. So, I think it's definitely an interesting story, and it was one of the motivations to put it together. Is that Dubai as a real estate case study is so fascinating about how it's grown, how it's not just conformed to what other countries have done, although a lot of that early development of Dubai was trying to look at other established markets, and a lot of the influences come from the British, the British influence, given the historical ties with the UK. But it's quite interesting that Dubai's had the confidence to say, we're going to do it this way, and the leadership that Dubai has is so very different to the government of Michael, the UK, for example. So I think that's also supported. It's helped sort of, if you like, business plan Dubai more independently than other markets. And I think that probably over the last 20 years, they've benefited from having that longer term leadership rather than political votes and changes in political parties, which can create turmoil.
It's sort of, it's one of those things that you know, watching the news in the UK, the US, or Europe, wherever it might be in the world, and you see the instability that comes with that structure, right? And then here in Dubai, again, having grown up here, it's something you just kind of get used to, and you know that there might be a few people at the head of things making the decisions, and there isn't a right for people to get involved in those decisions from a democracy point of view, but there is the sense that everyone is kind of working towards the same goal. There is this sort of this understanding that, for those, I always say it when an agent joins our company from overseas and we do a Zoom call, I always say that I think Dubai is potentially one of the most capitalistic cities in the world. And I say, add into the fact that you're coming here on a commission-based job, like good luck, because you're really signing up for sort of winner-takes-all environments. And that's what real estate is in Dubai. There's people doing very well, and those that are not doing well are essentially making nothing, right? Nothing. And that's very different to other cities and other jobs. But that seems to be how Dubai has always been run, like a meritocracy, right? Those that perform reap the rewards, and it seems to be working, right? Because the leadership, as you said, has stayed quite consistent in that fashion.
Yeah, I think there's a lot to be said for that, just from a planning perspective, longer term plan. I mean, like, if we look, one of the other references is about, the demand supply. That was a big discussion, wasn't it, a few years back? We've seemingly stopped talking about that as much now, but there's been a lot of, Dubai's because it's so new, there had to be quite a large amount of development to take place, ignoring sort of economics, just to make it feel and look like a modern city. And I think as we go into as we move forward, things are going to become a bit, less fast-paced and more along the lines of what we see in other international markets. But it's definitely an interesting, as I say, case study to students, to people who come and work here and choose to spend some years working in Dubai. I think if there's an interest in real estate, I think people are drawn to Dubai just because there's a curiosity there. There's sort of an awe of what they've achieved in the short time frame, and it's dynamic, isn't it? As you say, you can you have the opportunity to make a success of your career here. So there's that opportunistic side of it, and then recently did a few articles on Expo and the impact of Expo, and obviously that was another debated dinner table conversation. What is Expo? What impact is it going to have in Dubai? And I think we're seeing some strong sort of growth from that event, and just having the opportunity to have Dubai in a sort of global spotlight, and almost coinciding with the fact that people are making more considered lifestyle choices. I've used this term, sort of lifestyle migration, people coming to Dubai just because the quality of life is or can be better for you here than another market. So a lot of it's worked in its favour. Then of course there's the Qatar World Cup that there's spillover off that. So it's an interesting place. It's dynamic, and it does seem to turn itself well to take advantage of opportunities that get presented.
Yeah, I think it's sort of that business mentality that they've got, right? So treating Dubai like a brand in everything that they do, and then seeing where the opportunities might lie for them to capture more of the market. I think, the fact that they've made visas so much more accessible in the last couple of years is clearly a move where they saw during COVID a lot of people wanting to move around, right? Everyone could work from home. So, people were happy to travel and work from a destination. So Dubai made it very easy for them to come here. And, a lot of those people that did come are obviously the ones that could afford to come. And so they naturally come with the money and the financial situation that they're in. And we're now seeing a lot of those people are becoming buyers because they've now been here for a year. They've got a good taste of the city. And we used to always joke, my parents used to joke that growing up here, we would always see families come for 2-3 years, and then they would always say, I want to go back home, back home, right? And they would leave and would make a bet. We're like, bet you in a year they're back. And sure enough, they're back a year later. It's obviously not always the case, but the lifestyle here in Dubai, and everyone's got a different lifestyle, right? There's some people who enjoy the nightlife and that side of it, others who might enjoy the golf, some who just, like their kids being in good schools. But there's no doubt that no matter what you're sort of looking for, there's a lot of lifestyle opportunities here, which make it an extremely attractive place to live.
Yeah, definitely. I think I agree. Yeah. So likewise, in my own sort of sample population of the workplace, I've seen it time and time again. Oh, you're back. Even back with us, which is good. But no, it's a difficult. And sometimes that's there's the unfortunate life events that happen that mean that people want to move away temporarily and they come back. Others feel that there's a greener pasture somewhere else and find that there isn't. So there's all sorts of different dynamics. But I think more often than not, people do tend to look at Dubai as a longer term stay than or a home, should I call it, than historically. But it does, I think, it does depend on where you are in that life journey, so to speak. So no, but that just is again is a testament to how it's developed. I mean, even we used to travel outside and say we don't have this, we don't have that in Dubai. It's a shame, but now you've got everything. So exactly. I don't ask those questions anymore or make those observations. So it's certainly developed and become much more attractive. And I think you've got the early adapters but now we're attracting a much more solid foundation of population that means that the real estate market is going to probably benefit from that more stable end user, longer term buyer, because you're not you're accepting the fact that you're not going to make large speculative gains, although recessionary periods are opportunities for that. But and I think that adds stability. That alongside data is going to mean that growth is probably not going to be as high. But I still think there's a lot of opportunity for price growth in Dubai. It's still a fairly underpriced global real estate market if we look at some comparables outside Dubai. So then with the apartments that you buy, all the extra services you get in a standard apartment in Dubai versus a standard block of flats elsewhere, is quite apparent that they should have value associated to them that we don't always consider, because we're so used to it and it's so familiar in this market. We forget in other markets there isn't a concierge, there isn't the swimming pool, the gym in the building that in most markets would add a premium to those developments.
There's definitely that's what I always think about with Dubai's market, is we still don't know we've still not found the price per square foot, right? Like I think we have a good idea that we're probably still a bit underpriced, and but because we're only 20 years old, it takes time, right, to find where you sit within the global market. And as you said before, do you compare Dubai to London, New York, Hong Kong, or do you compare it to like maybe smaller cities that have similar population sizes? We don't know that either. So it's tricky in that sense.
I think over time as well, and obviously with the topical point of inflation and people wondering, real estate is a bit of a store of value or wealth, isn't it? Because, the cost of replacement is normally that threshold where, and if things are getting more expensive over time, then that threshold should be moving. There shouldn't be a situation where someone's buying a property below the cost it takes to build it. So from that point of view, generally that would push any real estate market higher. So there's the inflationary pressure. Real estate is typically a good inflation hedge, commercially linked to leases, residentially linked to hopefully wage growth in inflationary periods. So whichever way you look at it, real estate does quite well in periods of inflation. I think at the moment, I don't know all the answers, otherwise I'd have a lot more gold around my neck. But I think at the moment economists are kind of viewing this as a temporary short-run inflationary high period where there might be a bit more uncertainty. We might have a larger amount of cost associated to living, whether we rent or whether we own. But we're likely, or we're expected to see, or the economists, should I say, are expecting to see more stable inflation rates in a couple of years. So if it was longer term, then I would be saying new development's going to be pressured. Off-plan's going to look relatively more expensive than ready units. But because that's that's a 3 or 4 year cycle, I don't think, unless inflation carries forward over the next few years, those impacts aren't going to be felt in the market is probably where I would be seemingly looking at things at the moment. As well as obviously the records that keep getting broken into Dubai. You wake up every day and there's a new record transaction, and you.
I mean, personally, I think those records are somewhat distracting. I think a lot of the times, it sort of, I wouldn't say it sends the wrong message, because it is what it is, right? But it really represents one or a few individuals with a lot of money that obviously see Dubai as a good place to have that money sitting, right? Tax-free, etc. So that makes a lot of sense. But what we need to look at is more the sort of the first-time buyers, right? The people who are looking for a villa for them and their kids to grow up in, etc. And those records they don't apply to that group, right? One of the things that I'm like, when we got to late 2019, and then obviously during the COVID pandemic, like in the sort of March to June period, one thing that surprised me a lot was that there was a few instances where the price per square foot got to the point where it was below the cost. Okay. Now we know this because we, as a company, we sell a lot of plots. Yep. And then we've got obviously close ties with private developers that come in and build. Yep. So we know the cost of construction as well as the cost of the plot. You add in all the extra fees and all that might be associated to it, and that gives you your cost, right? Yeah. And we were seeing resales happening below that price. Yeah. To me, that obviously meant it was drastically underpriced. But what's your take on that?
Well, it's just an example of irrational behaviour, isn't it? Yeah. I mean, there's no reason, if we were all presented in the marketplace with the same information you had, that property transaction would go. So where there's, coming back to sort of the data, where there's more data and information in the market, investors or buyers will behave more rationally because you have pricing points. Market fear does do a lot to people's sight, and psychology is another part of the investment planning that you have to factor in. And if someone bought the property because they wanted to make a short-term gain, and then they saw it through COVID, they might be thinking, well, I'm not going to make that gain. I'll have to sell it because it's all doomsday and everything is doomed. Then that might lead someone to sell at those prices. But I think they're examples where you've got some inefficiency, some irrationality in the market. It was similar in, and again, it might be personal to leverage. Someone might have over leveraged themselves, and therefore they're more concerned about managing that side of things. And again, in 2008, a lot of people were over leveraged. They were buying things, buying multiple large portfolios of units, and then there was a sort of a fall, and no one knew like when is it going to stop. And if there's leverage against it back then, the penalties were a lot larger than they are now with the revised laws on that. So in terms of an explanation, it's like anything. People have sold stocks, haven't they, in the low points of COVID because they thought, I'm losing so much money. I just want to kind of feel better about myself. And unfortunately, they've been left in a position now where they've lost a big uplift. So the same can apply to a stock market, a real estate market, but as I say, moving forward with better data, we should start to see a buyer coming to the market with much more realistic expectations. We should also see sellers coming to the market with more realistic expectations. And as you say, those sort of headlines on what's sold in different high-end pockets of Dubai can often affect the psychology of a buyer or a seller if they're not looking at the data for what they're looking to buy. So I think once people are comfortable examining that information, then it probably makes your life as an agent a bit easier because you're not trying to force a large gap. You've got a seller who's reasonably well versed with what's happened in the last 6 months, and you've got a buyer that's well versed. And actually, you might see a higher frequency of deals being done because people are coming with more realistic expectations.
I think another thing on the sort of a lesson I've learned personally is affordability. I think that's something that it actually concerns me for the next couple of years, and it's actually one of the reasons why I think people, despite the inflation rates, people sitting on large amounts of cash could do very well in the next couple of years, because with interest rates rising, and that I question how many people have actually looked at the purchases that they've made, especially in like villa communities, right, where we've seen 50% growth. So they've obviously bought something that's now 50% higher than it was a couple of years ago. They've potentially gone on a variable rate because they've been drawn by sort of the 1 year fix as opposed to the 5 year fix. And now what they're going to see is their interest rates jump drastically. And if their salaries haven't gone up accordingly, they might find themselves in a position where they can't afford it, right? And I think what I noticed during the pandemic is that a lot of the people that sold during that March, June period, they knew that they were selling at a low period, but they simply, wages were cut, people were let go. They no longer could afford the payments that they had each month. And it's one of those things that I think a lot of the times people focus on sort of just getting the property, but they don't realize that if all goes well, this should be a 10, 15-year investment. Make sure that you can afford the lows, because they could come, and when they come, they could be a little bit tricky.
Yeah, I think one of the things that helps Dubai is that you've got that loan to value ratio that people are putting in. And as much as it's a barrier to entry, it is also a cushion. It's a safety.
Which didn't exist 10 years ago, right?
Yeah.
You could get 1090 or whatever.
Yeah, I mean, in the midst of the crisis, then it went back to risk aversion, and it was, I think, 35% deposits. But because the prices were low, it wasn't a big.
It was still 25% deposit, but the banks just became very cautious of who they lent to, right?
So lower loan, the lower loan to value, or that 20% amount is a margin that probably works quite well at the moment for Dubai lenders. I think it's probably, obviously there's discussions, should it be lower to attract more? It probably would, banks, I think again with transparency comes, risk management, which is better for the bank. A lot of this residential valuation could be now done automated, so banks could really see quite quickly what their exposure is on a 3-bed in the marina, for example. And we are actually seeing the bank margin, so the profit margin that the banks are taking on variable rates coming down. So that again indicates that banks are more comfortable to leverage it or loan against residential purchases. So although there's some headwinds with interest rates, and they'll probably stabilize in the US sort of 2.5%, I would have thought. I think over time banks are going to have to become more, or will become more attractive, just because historically there's been a large amount of risk priced into their financial product, and that's obviously meant that the interest rates have been higher, but we might be in a slightly higher interest rate environment, but the banks are taking a lower profit rate because Dubai is a safer bet. It might not make too much of a difference. Maybe there's an optimistic side of me that is pushing that, but I think that's probably where we might head, and it might not just mean because interest rates are going up, values are going to suddenly drop, because I think we've carried a lot of risk in the market that is disappearing over, as you say, over that 20-year time period. Yeah. So, I mean, I have no crystal balls involved, but that's what I would. A rational side of me is if you've got more data, you've got more and more time to evaluate those highs and lows. You've probably got a better opportunity for banks to become more competitive with their lending product.
But the banks have had that data, right?
Yeah.
For the last sort of at least close to 10 years, I would say.
Yeah.
Well, one of the things I struggled with is when the market was trending downwards, we had a lot of problems with valuations.
Yeah.
We would often, the companies would come back. So just for those that don't know, when you buy a property and as a purchaser, you're getting a mortgage, naturally the bank hire an independent third party, they come and do a valuation, and that dictates how much you're going to be able to lend, right?
Yeah. Yeah.
So during the period from 2014 up until the pandemic, that's when we saw like a softening of the market year on year. And every time we did a valuation, we would sort of hold our breath, because we would often get it coming below, and definitely a stubbornness from the valuers and from the bank.
Yeah.
What surprises me now is that that's actually kind of, even though the market's jumped so much, so we're talking about the same property now, just different market circumstance. We're actually seeing prices way higher and the values coming above in many cases. So what that tells me as well is that everyone is kind of riding a little bit of a sentiment wave. Yeah. That, when times are bad, they're sort of, okay, we need risk aversion, we need to be safe. And when times are good, everyone's just kind of eager to get the business. And that, to be honest, personally, that concerns me a little bit, because in my opinion, it should be a little bit the opposite way around. And it goes back to the cost of construction. Like, has there been a big difference, a big change in the cost of construction? There has, because we know the supply chains have been sort of made a lot trickier, but it hasn't been at the same level as the price rises we've seen. So just interesting.
I think value is generally again, my PhD was about value. It was more on the commercial side, but some of the things that, there was a section in there about the psychology of the value. Where are they receiving their information from? What's the expectation? The benchmarking against other valuers, and also the wider noise in the market. What are they hearing on the radio every day they drive to work is naturally going to impact how they look at a property. And they are, in a down market, there is an edge of caution, isn't there? Because there's the uncertainty. So from a liability perspective, there's probably the pessimism built into that, and that's why you see those gaps between what they're saying the value is versus on the ground what you as agents might. And there's always a butting of heads, particularly when markets are moving quickly, whether that's up or down. Because you're probably the first receivers of what's going on in the market. That then gets trickled down to the valuers, which goes to the banks and then the end users. So you're probably a bit more timed into the market because you're doing deals that no one else is seeing for, a month or sort of 60 days as a max. So no, I think, but that's globally an issue. I think if we asked any agent or valuer globally, they would probably have that same view of each other.
Exactly. I won't keep you too much longer, but I wanted to ask a question about you. Obviously, have been in Dubai for a while. Been doing this job for a while. You're looking at the market today. What would you say for an investor coming in with, let's say, 1 to 2 million dirham budget? What would you say would be a good sort of investment to make?
Okay. Okay. Well, yeah, I mean, I think that sort of price range,
it could be higher, it could be lower, just sort of ballpark.
Off plan does provide opportunity, doesn't it, to make higher price gains, but you go into it knowing that there's some risk, additional risk that you're taking on in that. So I'd probably be looking at a strong, although it's quite hard to find these deals in the market, a strong income producing asset from day one. I'd be looking at, as you said, at the mortgage, if I'm financing, stress testing that to the point of 5% above where we are now, just for comfort of knowing the affordability. And then, I guess the decision is, do you buy in a more established area and pay that premium, or do you buy in an upcoming area? I think longer term consistency, I'd try and find as prime an area as you can. A strong location near good amenities is going to always rent. Larger properties, 2 beds. Probably, if you asked me this before, I'd probably say studios and 1 beds are the best investments. But given what we've gone through, I'd maybe stretch that to a 2-bed property, and just as I say, look at your individual circumstances, understand what the market is giving investors at the moment. So, I mean, you'd know slightly probably better than me, but probably it's around the 6% return, knowing all the additional costs that come into that purchase and how that feeds into the equity that you need to put in. The advice would be look at things much longer term than a short term gain, and run a scenario. Look at all the data, go to the portals, get the data, be informed, but run the hypothesis of what you think is going to happen. I mean, I'll always look at an appraisal, and there's examples in this book of mine about, this is the baseline. Here's a pessimistic. Here's an optimistic. Does it still make sense? If it's making sense at the pessimistic, then it's a good opportunity, isn't it? I mean, it sounds simple, but it's very personal to everyone. And people have different. What I've learned over the years, Dubai is risky or less risky based on normally your home market. You have this natural bias to your home country, and we forget sometimes. Or I forget sometimes as a UK expat that there are countries that are a lot riskier than Dubai. So therefore, there is this is the safe haven. This is the dollar pegged, denominated currency. And one of the things I looked at actually in the, not only the dirham return, but if you looked at over 20 years what you'd have returned in different currencies, it's quite an interesting thing. Although that's a big risk that no one can manage successfully in property, in global property investment. We don't know where those currencies are going. So I think wider than that is, you don't want to be exposing yourself to a single market. You don't want to be exposing yourself to a single currency, and you don't want to be putting everything you've got into one asset type. Is probably where my sort of academic conservative nature would be advising. But there's a lot of good opportunities in Dubai at the moment still, even though we've seen the price gains. You're just buying them with a lower risk premium than what was there in COVID. I mean, neighbours are saying friends are saying, even blaming their partners. They should have pushed me to buy. I told them to buy. But it's kind of, you're driving looking at the rear mirror, aren't you? You're looking back and going, that was a good time to buy. But it's only with hindsight that you're saying
of
that.
Course.
At the time, there must have been something stopping you doing it. So I think the risk is not as prevalent in the market as it was. So I still think there's good opportunities there. But I think importantly, from what you're saying is personal planning is the success to property investing. Because if you've got your finances sorted out, you're not going to be forced to sell. And when you're forced to sell, you're selling it at the low point in the market.
Yeah.
So speaking to people, speaking to mortgage advisors, speaking to agents who can help find those opportunities. Because again, it's not the portals give the data. The experts will help you find where those returns are. So there isn't a single location in Dubai that I would say this is a great investment. I think there's a range of reasons why you're buying, what the motives are. If you're buying for an investment, you've got to look at the long-term cash flow and where are people going to always want to be renting in Dubai. Some people look at yields quite a lot, don't they? But a high yield is a high risk proposition. So again,
well, actually on that, so I agree with you in a large extent. I think premium locations, well-sized properties, I think those are two sort of criteria which would be important for me at the moment. And the reality is that you're going to find those in the older buildings. So whether it's Marina, it's going to be buildings like Marina Promenade, Al Najjar, Original 6. If it's downtown, it's going to be the residences, those kind of towers. And a lot of tenants, and I think tenants are one of the biggest driving factors in a market because they they're a lot more transient, right? So the fluctuations are more important, and then that has a lagged effect on the pricing. Tenants really like new properties. Like we've seen this, right? We've seen with townhouses, with apartments, they always move to the newest development. Mm-hmm. But I think that there is a hedge that you can make against that, and you can buy an older tower and then renovate. Yeah. And this is obviously very common in places like the UK, where entire markets are built on this, right? People go and buy old, renovate, make it new, and then rent those properties out or resell them. And I actually think that at the moment, that's one of the areas that has got the most potential in Dubai, where you could buy, let's say, a 2-bedroom in, Park Island, Dubai Marina. My guess is that it will cost you 2.3 million. You probably have a decent marina view, 1,300 square feet. It will cost you maybe 200,000 dirhams to renovate that apartment. But I actually think what you do by making that purchase is you hedge against those tenants opting for the newer developments. And in return, you'll get that higher yield. And as you mentioned, the pessimist view will be reduced. So, and we've seen this happen over the years where it's a good way of securing a minimum sort of 5% yield. Yeah. It does take work. It's not as easy as just picking up an off-plan property or whatever it might be. But personally, with the way the city is growing, I think there's going to be a lot of new. Yeah. There's not going to be that much old that's been renovated to a nice standard with an open plan kitchen, nice hardwood floor, whatever it might be. Yeah. And that's where I see massive opportunity coming in the next few years.
Yeah, I think. I mean, most markets. If you think about again the story of Dubai, you need the large units, the large floor plans. It attracts people
big
to
plots
those
and villas
and big plots. But as land gets more expensive, as development happens, then you either build higher or you build smaller. And there's a limit to how high.
Well, we've gone pretty high here.
Yeah. So no, I agree. There's a lot more, if you like, value in that proposition than buying off. And there's a lot of busy renovators in the market,
absolutely.
Who are making money from that and helping people achieve that. So I'd agree on that side of things. There are those are probably good places to start. Don't dismiss the old just because it's 10 or 12 years old, think about the redevelopment, renovation potential, and have that extra 300 square foot in the apartment to attract the tenants. Yeah,
absolutely. Great. Well, thank you very much. I think it's been quite insightful. I'm sure we could probably end up speaking for a few hours, so we'll have to make sure we do it again. But thanks a lot for your time.
Yeah, thank you, Sam.
All right.
Nice to meet you.